it was easy to sell things then, hard to buy things. Now we're opposite. It's easy to buy things, there's deals everywhere, but it's hard to sell things.
That's it. And the only way that you can become a good wholesaler is to learn. Okay, help me get in your head, Jordy. What kinds of deals are you looking for and why? Guys, I'm back with Jordy Clark. Jordy, thanks for being here. This is awesome to get your ideas, share content with you. I love talking with you because you're doing such big things and you've got so much experience. And for our listeners on this video, we want to talk about a little bit of kind of reverse engineering their wholesale business. Yep. So we have a lot of wholesalers that watch the channel. A lot of them working on their first deal, or they're trying to adapt right now in the market we're in. And it was interesting talking with you because we talked a little bit about some of the things you're doing differently today than even a year ago when we sat down with our previous interview, and you gave us kind of a cash buyer perspective at that time. So I would love to hear from you about what you're doing as a cash buyer, because you buy from wholesalers. You don't wholesale, you fix and flip, and you do buy and hold. Yep. So you are the ideal buyer for a wholesaler to bring deals to, as long as it's fitting your buy box. And that's the point. So some of the things, Jordy, I'm talking to a lot about with wholesalers is kind of the opposite approach that we did when the market was red hot, which is don't worry so much about, don't make the first focus the deal. Make the first focus the buyer, what they want, understanding what they want, so that you can now go into the market and look for opportunities that you have that match what they want. Yep. And so you're going to share some ideas here about your particular buy box, and that's great. But the point is if you're in Jordy's market and you're looking for deals that you can bring to a Jordy, a cash buyer, how do you understand what they're doing, how they've adjusted, what's important to them, so that you then can bring them the right deals?
Yeah. So I think it's having a conversation with, if you're wholesaling, who are you wholesaling to? And then, like you said, having that conversation of what are you buying? So my philosophy, and we flip up and down the Wasatch Front and Wasatch back.
Here in Utah.
Utah. So Salt Lake City metropolitan area, basically. I've got a philosophy, and I've been a realtor for a decade. I've helped a ton of people, almost over 800 now, buy, sell, transact as a realtor, and now I've phased into just being an investor full time because it's kind of like the next version of me. And anyways, I'm looking at it. I've got all these past clients that anyone that owned real estate from 2019 or prior has a ton of equity. Everyone who's watching this knows that, right? We've seen an explosion in values. And I would be willing to bet, just based on all of the data I look at, most of those people have an interest rate that's below 5%. I think the stat's like 80 or 82% of all 30-year mortgages have an interest rate below 5%. And then like 60% of all mortgages have an interest rate below 4%.
Because they either bought in low or they refinanced low.
Yeah, when COVID hit, everyone, there's a refinance boom. Yeah. Everyone refied. I know people that, I have a buddy who bought a gorgeous home up in Park City, multi-million-dollar home. He has a 2% rate on that house.
It's so funny. I was joking about this with Pace Morby, but one of my Lake Mountain houses, I got a couple. When I bought that, I was at like a 4, mid-4, and I remember I was pissed because I was like, that's way too high. Yep. And I was trying to, I never did. I was trying to refinance, down at like a 3.8 or something. Now I'm like 4.6, amazing. I love my rate.
Yeah.
It's perspective, right?
It's all perspective. I mean, if you look at the last 70 years of mortgages, the average interest rate was like 7.2%. Yeah. And that's about where we're at today. So historically, we're average today. Yeah.
And it will get to a point where the rates today feel normal.
Yep.
We're just still kind of like remembering the old rates.
Oh yeah.
But they'll in the near future, it'll be like 7%, amazing.
Yep. Yep. So I mean, everyone that's got a 3% rate though, like they are now stuck with that payment because salaries have not exploded 100%. Someone that was making 60 grand is maybe making 66 now. And, they're not making 120. No employer is just going to double your salary just because inflation is high, right? Yeah. So everyone's going to stay with that rate that already bought. So for me, I was looking at all of this data and, I was licking my wounds from a few losses. we lost a ton of money flipping just because, like everyone, I've got friends that flip in California, Missouri, Florida, and I was talking to them all in this mastermind I'm in, and everyone lost money.
Yeah, everyone has a bad deal. Yeah,
it happens, right? Like markets turn on a dime, and as liquid as I try to be with real estate, I'm in a deal for 6 to 12 months, and got caught. So I also rode that wave in COVID where everything we bought, and I think we talked about this on the last one, didn't matter what you bought, you made money on it because everything was going up. Here we had 30% annual average appreciation.
Blew up here, yeah.
So you bought something and the market carried you, you sold it, you made a profit. It probably wasn't you as a flipper, it was probably the market, right? But it was easy to sell things then, hard to buy things. Now we're opposite. It's easy to buy things. There's deals everywhere, but it's hard to sell things.
That's it.
So what I looked at is I said, well, I don't want to be, in the, our median price point's about $600,000 here, meaning the average house is worth $600,000. So I don't want to be in that $600,000 to $2 million mark because anyone who's moving into that is selling something. You don't just go out and buy $1 million home as your first home, in our area. So that person is going to have to make a decision. Do I want to let go of, call it my $2,500 payment to get an extra 1,000 square feet? And now all of a sudden, I'm paying double what I paid 4 years ago and my interest rate is double. So I'm quadrupling my payment.
So you're saying they're not going to trade for a double the payment because the interest rates are twice as high?
Yeah.
They're just not going to do that.
No person in their right mind, unless there is a life circumstance that's happening.
Yeah.
But most move-up buyers aren't having those life circumstances, right? A move-up buyer, they've been in their house for a few years. They're kind of getting ready. They've had a few more kids maybe. They got a little bit of a promotion. They want to be in a different area. They're relocating. That's a move-up buyer. Well, not the relocation, but the death, divorce, relocation, that's life happening for somebody that's forcing a move, right? Most people aren't gonna say, hey, I'm gonna go from this house that has a 2-car garage and 5 bedrooms to a 6-bedroom with a 3-car garage, and I'm going from a $2,500 payment to a $7,500 payment.
It's not gonna do that.
It's not gonna happen. Yeah. So they're just gonna sit in their house and renovate or
that
do whatever.
Price point is kind of risky to invest in.
To me.
To you.
Because I don't want to be dealing with that buyer because I think the buyer pool is diminished. The sandbox I want to play in this year is I want to focus on first-time home buyers because their option is, holy cow, rent's going up on me again this month, and I'm now paying $2,000 a month for a 2-bedroom apartment. Well, why don't I just go pay $2,000 a month for a 3-bedroom townhouse, right? That's their option.
And 7% rate doesn't matter anymore because they
don't have the 3%
They don't look
rate.
at the rate, they look at the payment versus their rent.
Exactly.
And that's a better play for you to invest in as a flipper.
Yeah, because I'm going to have a bigger buyer pool. I'm going to have a motivated buyer who, maybe their lease is ending and they need to get into a house. And so I want to play there because I can cycle through my inventory quicker, which is going to give me better returns, which is why I'm investing in real estate.
So that makes a lot of sense. In fact, guys listening, what Jordy just explained there probably applies in a lot of markets, that same idea around that. I think the point though is that he's not just a deal's a deal, whatever, I got some comps. He's trying to look at the market and his business strategy and actually have rational around it, a reason. You're being very intentional about the way that you're approaching the market. And that's because you are a real investor. When I say real investor, what I mean is you're following sound business practices in the way that you make decisions. In the previous market, anybody who's gotten into wholesale real estate in the previous couple years, you're so messed up because you were operating in a market that was not normal and it did not follow sound business practices. You just made money whether you bought right or not. Everything worked.
Yep.
Normally those people would have been out of business because they would have messed up if they paid that price.
Yep.
So the people still alive today, the cash buyers that are the Jordys in the marketplace, they're not just going to buy whatever thing you throw at them. They're going to be very strategic about how they're buying.
Yep.
And the only way that you can become a good wholesaler is to learn, okay, help me get in your head, Jordy, what kinds of deals are you looking for and why? And you're very clear about it right now.
Yep.
Now that could change. Like we could be talking in a year from now and you're like, okay, now here's what I'm doing differently. Because as an investor, you're just taking the market and the opportunities it presents and then adapting to that.
Yep.
And that's just being a smart investor that always evolves.
Yeah.
Right?
Yep.
So I like that. That's a really great way to kind of look at that. What other things should wholesalers who are looking for opportunities, what should they be thinking about when bringing a deal to you? Like if someone brings you a deal, how would you coach that wholesaler on making sure they're bringing you everything you want to see?
Yeah, I mean, that's a good question. So for me, I'm a pretty busy guy. I've got an active real estate team that we're working on. I've got flips, I've got rental properties. My wife has a home staging business that we're franchising, and we've got a lot of moving pieces, and we've got, a couple of kids trying to keep up with you. So, there's just a lot we've got going on. So I don't have the time to run out to every single property the minute somebody's like, hey, I've got a deal. So first thing is I want to see what's it worth and what can I get it for? I want to see the spread. So if the house is worth $275 and I can get it for $130,000, I'm going to look at that deal because I go, okay, it's a 900 square foot house, based on my average rehab prices, I'm going to be into this 60, 70,000 on the rehab. And there's enough spread in there for me to make a profit.
So you want to see a high level at a glance, ARV, the price you're offering it at, before I even consider even looking at another thing.
Yeah, and I take the ARV with a grain of salt.
Right.
Just because, I've been a real estate agent for a decade. I've talked with tons of appraisers, and the problem with real estate, it's not a problem, it's an opportunity, is values are subjective.
Yeah.
Right? So what one house is worth to one person, it might not be to that person, right?
And wholesalers tend to inflate ARV, which is like, don't do that because Jordy's going to do his own research eventually anyway. So why not just try to be as accurate as you can?
Yep.
Don't just give him the best comp and say that's the ARV. Be reasonable about it. He'll have more respect for you if you're fair about the ARV than if you just inflate it.
Yeah, and I get it. A wholesaler, like they want to make their money. We're in this to make money, right? Like it's an ecosystem. We all need to eat. We all have families to feed.
Yeah.
I get it. I've told every wholesaler that's ever done business with me, I don't really care how much money you make.
Yeah.
You could make $10,000 on this assignment or $100,000. And the difference to me is nothing.
Because you care about your buy price.
Yeah, it just has to make sense for me based on my strategy.
I tell that to wholesalers as well because I have a great perspective because I wholesale and I flip, so I kind of get to really see both sides really well. And as the cash buyer side, I try to tell wholesalers, I said, look, I'll give you exactly what this is a deal for me at, and if you can make money at my number, go for it. If there's somebody else that's going to pay more, I get it. You got to do what you got to do. All I can do is tell you my number and what works for me.
Yep.
And if you want to work with me and you're okay with that, then great.
Yep.
Then we'll transact together.
Yep.
If not, you can find someone willing to pay more, go for it. Because I've been in those shoes too. And as a wholesaler, you're trying to find the highest paying buyer. I get it.
Sure.
But let's just, the thing about it is like, can we work together in a way to where me as a cash buyer, I'm effective at communicating what I want and what works for me. And then you as a wholesaler, learning that and being able to bring me just things that fit. And that's where I see wholesalers do really well is when they start to really learn their buyers and what their buyers want, and then they can bring them deals that fit.
10 years ago when I started in real estate, I feel like that's what wholesaling was. And, someone would tie up a property and they'd collect a $5,000 or $10,000 assignment fee, and then the flipper would go off and do it. But it was relationship based. And I think, I'll say from 2019 to 2022, it was the exact opposite, where it was like everyone wanted to be a wholesaler, and that's okay. I love wholesalers. I want more of them to be out there, but they wanted to make $100,000 per assignment or $90,000 an assignment, right?
Yeah.
And it became this thing where it was no longer a relationship game. It was, in my opinion, wholesalers trying to make as much money as possible, which again, I'm okay with. But at the end of the day, I think it's shifting back to a relationship-driven business, because not everyone is buying, everyone lost money in the last few years. If you've been buying real estate deals, and the non-professional investors are now out of the market. The speculators are out of the market, because that $90,000 loss freaking stings. And I don't care how much money you make, like when you're cutting a check, it hurts.
Yeah.
And so a lot of people who can't stomach that are out.
Yeah.
And that's okay. Like this
Mom
is just,
and pop flippers are gone that were overbuying because they lost money. All the spec guys, all the iBuyers, a lot of the hedge funds. So now you're left with just the tried and true flippers and buy and holders, right? That are gonna follow sound business practices. So that's a relationship, because there are less of them. So you're gonna need to depend on that. I mean, I'm preaching from the pulpit. You've got to build relationships with your buyers. If you're going to survive as a wholesaler.
Absolutely.
Yeah, love that. Well, guys, hope you got some really good nuggets out of this. Thank you, Jordy, again for sharing your insights. I love that you shared your kind of your buy box strategy with flipping right now. That's really, really great way to look at it. I think that's spot on with where we're at today with interest rates and how buyers are moving and trading up, right? And so anyway, love that. Guys, if you've got any questions or comments, leave those in the comments below and we'll try to answer those. I'll put your information below too, so people can follow you, and you have a podcast that you do, which is great. And you guys can get in his world a little bit, but thanks guys, and we'll see you on the next video.